Solid, man. Thanks, brother. See ya. How's it going, everyone? Welcome to the sweep. We're going to get started here in just a couple seconds. All right, let's go ahead and get started. Just a quick reminder, like, share, and follow on social media. Along with Facebook, Instagram, YouTube, we also are on Rumble, rumble.com/daytradesmart, and tiktok.com/@daytradesmart. So theirs is just a little bit different. After the slash, you have an @ sign, and then the name of in our case, daytradesmart. All right, awesome. And then, of course, our email. Let's go ahead and get cracking. And as always, if you guys have questions, comments, go ahead and chat those in live, and we can address those. Obviously, try to keep them day trade related, and they don't necessarily have to be relevant to today's session, even if they're relevant to another session that we did in the past or just a general question. Feel free to chat those in. All right, so we're going to start with Forex news today, primarily because there's some big things happening, and from now on, when there's some big things happening in the following week, so this would be for next week, right, July 5th to the 9th, we want to just make you guys apprised of those things so that you can be aware of them. Now, here's a quick note. We don't trade during major announcements. So why would we look at an economic calendar? Well, that way we know if there are some announcements that are going to be during our trading time, and because we want to avoid those times. If they're major announcements, if they're minor announcements, yellow or gray, and I'll kind of explain that in a moment, type announcements, then, we're not going to worry, we don't have to worry about them too much. But these red and orange announcements, those are the ones you really want to focus on. You might not even know what they mean. I would definitely recommend looking into them, but you might not know what they mean initially. But definitely just try to stay away from the announcements I would say at least 30 minutes prior to the announcement and at least 30 minutes after the announcement, if not more, in either direction, before or after. But I would say at the very least 30 minutes before and 30 minutes after, just sit it out. If that means that you're not able to place a trade, for the day at that time, then it's better to not than to chance it, because it's just unpredictable. It's just going to do whatever it wants to. There's no indicator or even the news itself that is going to represent how it's going to move. Even if the announcement itself should do a certain thing, like cause for that currency compared to increase in value or decrease in value, it doesn't necessarily reflect that in the markets. And sometimes it's just temporary, right? Let's say it's supposed to increase the value of a currency pair, like we saw with the Fomc announcement a couple weeks ago. That should have devaluated the U.S. dollar. But as we saw, we've actually hit highs that we haven't seen in 2 years, right, on the U.S. dollar. So, it doesn't necessarily mean that the market has to reflect what the announcement did. And sometimes it's just initial, right? You get an initial swing in one direction that's really aggressive, and it may stay that way for a number of hours and then come back very aggressively in the other direction, in the initial direction, or what the announcement should have done. But in the meantime, you're just drawing down, right? So, and as you can see with the U.S. dollar, even though the Federal Open Market Committee did not increase interest rates, the U.S. dollar just continued to gain strength over the next couple weeks leading to today. So, it could be just something that's, for the moment, and then it starts to go back the other direction, or it could be something more long-term. In any event, stay away from them, because they're not going to help you. They're more going to hurt you. Again, we want to find consistency in the market. If you're looking to get lucky on a trade or something like that, you're better off just going to Vegas. You'll lose it quicker, and you won't have to, it won't be so drawn out. Or you hit it big and you got that one win, but you can't expect that you can do that all the time, right? Okay, so the source that we're going to be looking at today for these announcements are from forexfactory.com. And I'll usually use a couple of different sources. So I'll use forexfactory.com and then, another source for Forex news if I'm trading Forex, or if it's futures, I'll rely on other types of media outlets. But specifically for Forex, I'll use two Forex calendars, because sometimes you'll find that one has some things that the other doesn't, and vice versa, right? So it's better to check a couple. The other place that I'll usually look is just a media outlet, right? I'll go to CNBC, not because I trust anything any media outlet says or anything like that, but I know that traders rely on this stuff. But more than anything, retail traders outside of our organization, but I know more than anything, or rather more than anything, why I like CNBC is just because of the layout. It's really simple. Up here, I've got everything that I need to kind of look in on things. If there's any breaking news or something that's going to happen soon, you usually get like this red bar up here that kind of tells you that something is, the president's going to speak, or a foreign dignitary is going to speak, whatever it might be, right? You're going to see that. You can also just look at, what the headlines are, if there's anything that, you want to keep an eye out for that could potentially disrupt your trading for the day. But right here, these are nice. You can just look at like the U.S. market, the Euro market, Asian. I don't usually look at bonds. I'll look at oil, gold, and then of course foreign exchange. And so if I look here, and I'll usually look at these headlines right here, and sometimes if there's big enough news, you'll see them be redundant. So it'll be like here you'll see it, if let's say the Federal Open Market Committee is going to make a statement, like the meeting minutes that we'll get on Wednesday, you might see it here under U.S., right? You might see it here under oil and under gold and under FX. You'll see a similar bulletin right here. So that lets me know, okay, that's a serious one, right? It's something I want to keep an eye out for. And sometimes it may not be just foreign exchange related or not foreign exchange related at all, but still affect the foreign exchange market. So definitely want to keep that in mind. Okay, enough of that. Let's go ahead and go to the calendar. Actually, I want to go to the slide first because I want to show you. So on July 5th, which is Monday, RBA, so that's rate statement for the Aussie and the cash rate. So they're going to release their statement, and whether or not they're going to change their cash rate, right, which is right now 0.10%, and so this is going to determine, that announcement is going to come out and reflect how they voted on that, whether to increase it, decrease it, keep it the same. Right now it looks like they're going to, the forecast is that they're going to leave it the same as it already is. So there may be no change there, which also can affect the market very violently. So keep an eye out for that. That's at 10:30 p.m. Mountain Standard Time. So Eastern, that's like midnight 30, right? So just be aware of that. And again, if you're curious about what these things mean, when you're on these types of calendars, you can go to this little I didn't pick up that OPEC. That one must have been added. It's an all day. But you can go to that. Like if you want to know what that is, right, you can just click on this little folder right here, and it'll give you a synopsis of what it is. Right? And you can look at historically how it affected the markets. So this is a cool tool, which is like why I like Forex Factory. And you might not understand a lot of what's being said here, but after a while you'll start to understand the lingo. You'll be able to keep up. So you get kind of this byproduct education by looking at these. It makes you more aware of things that are happening around the world and how that affects this symbionts that we live in as a planet and not just a country. Because it's things that happen in other countries affect our country, just like things that happen in our country affect other countries. So there is some symbionts there, and doing things like this really helps you to understand the overall perspective, right? So it's a really useful tool. So with the exception of that one that we saw on for OPEC, that's pretty much what we've got in store for, and I guess the CAD, BOC, so let me bring this back up, the BOC Business Outlook Survey, which is an orange, so it's medium impact. The red ones are high impact, and sometimes there'll even be yellow ones or gray ones like this, and these are all low impact, right, or no impact, because that is just saying that there's a bank holiday. It's not really an announcement or anything. It's just saying, hey, there's a bank holiday for the U.S. because that's when we're observing July 4th, right? That's a U.S.-based holiday, so we're not going to see that being reflected for any other currency pair or currency except the U.S. dollar. And the same happens for other countries when they have country-specific holidays as well. That's another thing you can kind of filter, take out the low or no impact announcements, what currencies you want to see, what types of events, stuff like that. So, and then July 6th, which is Tuesday, starting at 12 a.m. Mountain Standard or 2 a.m. Eastern, we got RBG Governor Lowell speaking. So that's a red announcement. A lot of times traders will try to decipher clues as to their projections based on a lot of these speeches, and sometimes those speeches are designed to do that. So the market can react very aggressively during those times. Again, it's 12 a.m. Tuesday, July 6th for the Australian dollar. And just because it's on, say for example here, the Australian dollar, doesn't mean that's the only currency that it's going to affect. Sometimes the announcements, if they're large enough, and I'll give you an example of one in a moment, they can affect all currency pairs across the board. And then we've got ZEW economic sentiment for the euro, and then German ZEW economic sentiment for the euro as well. And then we've got USD. This is ISM Services PMI. And you can see that this is the announcement, and then right here is what it was previously, and right here is what the forecast is. And then if you click on these folders right here, a lot of times they'll tell you if the forecast is greater than or rather if the actual is greater than the forecast, then that's good for the currency. Or if the actual is less than the forecast, then that's good for the currency or bad for the currency, right? So, for example, unemployment, right? Low unemployment is good for the currency. So if the actual came out lower than the forecast, that would be good for the currency, whereas if the actual came out higher than the forecast, that would be bad for the currency. Okay, so just to kind of give you guys a quick synopsis. Also, sometimes the actual and the forecast will be the same, but it's still bad for the currency, right? Because it's just bad. Like if unemployment numbers came out and the forecast was that they were going to be lower than they were previously, or rather higher than they were previously, there was more unemployed people, and the actual came out to reflect the same thing as the forecast, that's still bad that we have more unemployment. It's bad for the currency and the economy. So, it being different than the forecast, the actual being different than the forecast, isn't the only way that it'll affect negatively or positively. It can be the exact same, but the number that was forecasted was also a negative for that currency or economy. So just something to keep in mind there. And then July 7th, we've got EU economic forecasts and IVPMI for the CAD, and that's at 3 a.m. for the Euro Mountain Standard, so 5 a.m. Eastern, 8 a.m. or 10 a.m. Eastern for the CAD, the IVPMI. US dollar at 8 a.m. or 10 a.m. Eastern is JOLTS job openings. And then at 12 p.m. Mountain or 2 p.m. Eastern, FOMC meeting minutes. This is going to be the one for the week. This is going to be the biggest one for the week. FOMC meeting minutes. So these minutes come out after the announcement. So the announcement happened, like say for example the RBA rate statement, right, and cash rate comes out, and then a few weeks later they released the meeting minutes where they met and discussed and decided what the change or lack thereof was going to be. So FOMC had decided that they were not going to increase interest rates, so they stayed the same. These minutes are going to reflect what was said in that meeting, right? That's what meeting minutes are. And based on that, a lot of times they'll say, yeah, we didn't increase interest rates, but we expect to increase them come, next session or whatever, right? And that right there, just saying that right there, can bolster or deflate a currency. Just saying that, traders will react immediately to that, like on the dot. So if there is something that's unexpected in these meeting minutes, expect that at 12 p.m. Mountain Standard or 2 p.m. Eastern, you're going to see a reaction in the market, and literally it'll be within seconds, right? Maybe delayed by 5 minutes, but not usually, unless whatever that impactful thing was a little deeper in the minutes. But otherwise, you're going to see, if it is something that's impactful, if they did talk about something critical, and it comes out in those minutes, you're going to see the market react, and it may not just be the U.S. dollar, right? And so it may not just be currency pairs that have U.S. dollar in them, like Euro USD, Great Britain Pound USD, whatever it might be. Right? It could be other currency pairs as well that don't have U.S. listed on them. Okay, and then RBA, Governor Lowell speaks again. You can see he spoke on Tuesday, and he'll be speaking again on Wednesday, July 7th at 8:30 p.m. Mountain Standard or 10:30 p.m. Eastern. And July 8th, we've got some medium impact, U.S. dollar, 6:30 a.m., unemployment claims, 9 a.m., crude oil inventories, and then the first day of the G20 meeting, right? So this is G20, so it's a little more expansive than G10. If you guys don't know what they are, again, just go in there, click on it, you'll see what G20 is. Okay, and then that brings us to Friday, and Fridays aren't usually busy days, but this July 9th, this coming Friday, will be a busy day. We got President Lagarde speaking at 4 a.m. Mountain or 6 a.m. Eastern, and BOE Governor Bailey speaking for the GBP at 4 a.m., both of them speaking. And then 6:30 a.m. Mountain Standard or 8:30 Eastern, we got the CAD, Canadian dollar, employment changes, and unemployment rate, right? And the forecast is lower than the previous, which is good, right, for unemployment. And the actual, so if the actual comes up higher than the forecast, that's going to be bad for the CAD, for the Canadian dollar. And then on Friday is also day 2 of the G20 meetings. And I don't think there's a day 3. Let me just make sure. 6th, 7th, 8th. Here's 9th. There's G20. And Saturday, let's just make sure. Yeah, there's nothing on Saturday. So sometimes there'll be like the, G10s go like Friday, Saturday, or Thursday, Friday, Saturday. There'll be 3-day sessions, or sometimes Friday, Saturday, Sunday. Where here the G20 is not going to go, but 2 days. So it'll be Friday and Thursday of next week, which will be the 8th and the 9th for the G20 meetings. And those are going to be all day. So keep an eye out for anything that could disrupt your trading within those sessions as well. Okay, so that's so again, we're not looking to trade these announcements, but rather we're looking to know where and when they're going to happen, so we can stay away from trading when those announcements occur. Okay, and that's, I know that a lot of the industry, a lot of the day trading industry, that's counterintuitive, right? They say, oh no, you should trade announcements. There's volume, there's liquidity. And there is a reason why 90+% of individuals that attempt to day trade fail, because they try that garbage. Because guess what? There are tons of people every day, every year, right? And there is no off season for Vegas, right? That place is always on, right? But with the exception of COVID, that place is always on, right? So you can see that people, if they've got it in them, they want to be risky and they want to gamble, good. Then they're going to do that in Vegas, in the market. They're going to do it in other facets of their life. It's going to show, right? So just because a whole bunch of people do it, it's like your mom told you when you were younger, if all your friends jumped off a cliff, would you do it? And, of course I said yes, because, if my friends did it, they're probably jumping into water, and that sounds like fun, right? But you get the point, right? Just because a bunch of people are doing it doesn't mean that it's a good idea. especially when we talk about day trading, considering how many people fail at this, right? So if you don't want to be like them, then do something different than they're doing. Okay. Trade of the week, we're going to talk about flat top. So we're going to look at flat top because I told you guys we wanted to start looking at things with regard to the TNTs because we hadn't done that yet. So we're going to look at flat top, and then I'm going to show you guys some illogical, like blatantly illogical ways that the flat top setup works and kind of explain logical and illogical. It's actually something I covered on the Wednesday session for our advanced members on Wednesday night. So for those of you guys that are attending this session that are members that attended Wednesday night, it'll look familiar, not this, but the next segment will look familiar because it's part of what we talked about. And I've mentioned in some of our other videos on YouTube, but I don't know that we've talked about it at all on the sweep. So I wanted to talk about that a little bit today as well. Okay, so the flat top has two parameters that involve the major minor and the thick orange line. Now the thick orange, all we want it to be is flat, and when it's at the bottom, flat, and the value is -100. On green chart 2, it would be 0. For those of you guys that are using green chart 2. And major minor oversold at the same time, so below the red line. And then we'd be looking for a long trade. Now, when it's flat on top with a value of 0, or on green chart 2, 10, and major minor overbought above the blue line, then we look to take a short or sell trade. So really simple. We're just using TNT and major minor. Sometimes we'll use TNT and pressure, or TNT and major minor, sometimes major minor pressure, sometimes major minor and TNT, sometimes all three. But for this particular pattern-based setup, systematic setup, we're going to be using just the thick orange of the TNT, none of the other ones, and the major minor and where they are in their respective ranges. Okay. So let's look at some examples. All right, let's go here. I'll show you guys what these lines are later. Let's go back. Thought I had this set, but that's right, I was looking for those other numbers, so. I know how to do this. I have a tool for that. Use your tools, Hiram. Let's go to 1112. All right, so we want to see that thick orange line flat, major minor overbought, kind of like we're seeing here on the Australian Canadian dollar, and the candle to remain that way, and then we would take a sell. Now, this is considered an illogical setup in that a lot of times the major minor are pointed up, right, which seems illogical because these are pointed up, but it's telling us to sell, right? And a lot of it is just this nuance. And really, it's not. It may not even sell, really aggressively, but it's going to have some pullback, right? And so think of it this way: if you knew, let's say 100% of the time, just to kind of give you a blown out example, let's say you knew 100% of the time that when you saw a certain thing within an indicator or a candlestick or whatever, that 100% of the time you could get let's just say a 1 pip take profit within a 1 pip, or a 2 pip stop loss, right? But you're hitting that 100% of the time, right? You know that that's going to happen, and every time it happens, it wins, right? I mean, that is that's enough to make you rich, just that, right? So it's not always that we're looking for these big moves. It's not necessary, right? And if you are, that's okay, it's fine. I'm not dogging it, but it's not necessary. It's not going to be any more or less profitable than a smaller move. You know, and sometimes, you know, depending on the situation, scalps, trades that are you know, small for small movement or for quick periods of time are more valuable because you can take more of them, right? So you can compound more aggressively. Whereas if you're waiting for a trade to fill for hours or even days because it's just working, you know, really well in your favor, you know, within that time you could very well have taken, you know, handfuls of trades that could be worth vastly more than that amount just because of the compounding on those, right? Even if all the parameters are the same, right? Let's just say they're both a 1-to-1, they both win at 70%, you know, but one of them takes, you know, at least a day before you take profit, where the other one you can get 5 of those in a day, right? Well, you know, by the time you're done with the even second one, depending on your account size, you're already increasing your lot size, right? So even if you took the same amount, you took 5 trades, you know, or rather you took, you know, let's say 50 pips, and then you took 5 pips for 10, or 5 trades for 10 pips each, which is 50 pips. This 50 pips would be worth more than this 50 pips because each of those individual trades, you would increase your lot size based on your win, right? So you would have that compounding effect. That's why a scalp method will always outperform a long-term method. Okay, so back to our trade setup. So we've got our flat line, major, minor overbought, and we're looking for a sell. And let's just use the parameters that we usually use, which is a 10 pip stop loss and a 5 pip take profit. So this is a 2-to-1. Again, if we're risking 2 times the amount that we're looking to gain, then we have to win this trade at least 70% of the time, right? So again, these may not be the parameters that you would use for this trade setup. That would be based on your back testing, but it's just nice to have a target when we're looking at these, right? And this is the target we generally use when we're teaching, you know, our beginning members how to do this. So that's what the parameters we're going to use today. Okay, so that means that our entry would be at the end of this candle, and our take profit would be 95118, 95118, which is 5 pips below our entry. So we want the market to go to this blue line, and we want it to go to that blue line before it goes up to this red line, 95268, which would be 10 pips away from our entry, 268. All right. And let's go forward. Actually, let's look here for a second. We see this one's flat. The value is 0 the way it's supposed to be. Major, minor, not overbought, so we're not looking at that one. And that one's flat. The value is not where it needs to be, and nor are the major, minor up here, so nothing there. And no other ones are flat. Okay, just want to make sure. Let's click forward. Okay, good. So pretty cut and dry, right? It moved up about 1.5 pips, and then it came down 9.4. And this is what I love about these illogical setups. So a lot of times the market, especially, you know, if these are pointed up, a lot of times the market has been moving up in that direction, right? And then the indicators give us these nuanced signals, and we're like, oh, we can steal a trade here, right? We just kind of jump in really quickly and get a nice quick, you know, in and out, right? And that's, you know, and that's generally why, in my opinion, I prefer some of these reversal type, you know, illogical type setups. Now, although this is more of an illogical setup, we've created a pattern out of it so you can start understanding some of these nuances without having to master it first and still be able to use it to make profit in the market. So it works very effectively in that way. Okay, so moving over to the left, we have another flat, 0, but these are not above the blue, so nothing there. And none of the other ones are flat. So we'll just go to the next candle. Okay, right here, the same one, right? It's flat, zeros. And by the way, we're just looking at this part of the indicator. So let me show you here. We're just looking at everything to the right of that line. To the right of that line right there. So this is flat. Doesn't matter if it's flat back here or back here. We want to see that this right here is flat, where this candle is occurring, and these major minor are above the blue. So we're not looking back here. And there are times where we would look back there, but this is not one of those, not this systematic type setup. Okay. So right here, we would be looking for a sell. Again, major minor are overbought, flat, value is 0. So we'd be looking for a sell from 1.12729 to 1.12679. 679. That is 5 pips. That's our take profit. We want this to go down. And then our stop loss would be 1.12829. Oh, I had almost right on it. All right, 8229. Okay. There's our stop loss. Let's move to the next candle. Boop. There you go. Okay, so we went up about 5.5 pips, but we didn't go 10. So, and then we came down 10.2, more than double what we were looking for. We would have taken profit on that one as well. Good. Now, if we go back, we can see that this Gdp Jpy actually had another flat, but major minor were not above the blue line yet, right? So we would not have accepted that one in our systematic trade setup. And we don't have any other flat lines anywhere else, so let's click forward. Now, right here, again, it's flat with a value of 0, and major minor are now overbought. In addition to that one, we also have another one over here that is flat with negative 100, right? And major minor are oversold. So then we'd be looking for a long trade there, okay? So first, let's look at this Gdp Jpy, and we're going to replay this chart so we can see when we would enter that trade, right? Because again, the 3 things we want to be able to accomplish with the trade of the week is identifying the setup, knowing when to place the trade, and knowing how to place the trade. Let me do that. Now, of course, the how is a little more complicated because you got to back test and know how to use, MetaTrader 4 in this case. But we're just going to give you, again, these parameters, these arbitrary parameters to practice with if you find yourself practicing with this setup. And just for us today to be able to look at, to have a goal in mind. Okay, so when that candle first started, we can see that the minors are not above the blue line. They're not overbought yet. The thick orange is flat, and it has the correct value, but minors haven't really gotten into place yet. So we're not doing anything yet, so let's go ahead and fast forward. Nope. Not our setup yet. Oh, so right about there, right? We can see that now we've got it. It's flat, zeros, and major minor overbought. Now, if this is green chart 2, then it wouldn't be zeros, it would be 10. This would be flat with the value of 10. Or on bottom, it would be flat with the value of 0. I know it's frustrating, guys, for those of you guys that have been around for a while, but it's a good thing. It works to our advantage because of the things that we can now do with green chart 2. But beyond, we're not going to focus on that today. What we're going to focus on is just the setup. Okay. So we have our setup. However, we still have 9 minutes and 45 seconds left on this candle. So we're not going to execute for 9 minutes and 45 seconds. And in that time, if this is still flat with the correct value and major minor overbought, then we will go ahead and press the sell button and enter our trade. So let's go ahead and get down to the last couple seconds here. 7, 6, 5, 4, 3, 2, 1. And of course, this is one that we also send out alerts for. It'll just, show up, hey, flat top on this currency pair. And these definitely happen less frequently. So it's nice if you have an alert for it. Okay, so 1 minute and 9 seconds. Speed that up a little bit. 4, 3, 2, 1. 17 seconds. So maybe at this point, you've got your MetaTrader 4 ready to go, ready to press that sell button. because in 17 seconds we got all of our parameters: flat, correct value, major, minor, overbought. So in 17 seconds, if I press play, I guess. Okay, 17, 16, 15. I'm just going to draw a line where we would have entered. Five seconds, 4, 3, 2, 1. Next candle comes out, and that's where we place our trade. Right? We press the sell button. 147.058 is our entry. 147.008 will be our take profit. And make that one blue. And then our stop loss will be 147.158. Make that one red. All right, let's play this out. Looks like it's getting close already, but it's not quite there. Okay, so let's fast forward. Let's go 200 times the speed. It's moving up a little bit right there. Went up about 5.5 on that run. Kind of oscillating back and forth. Oh, what happened here? Okay. It's a little more oscillation, a little more back and forth. Here we go. Come on. All right, there it is, right? We went through the line about 5.6 pips, so that would have given us a profitable trade as well. We did take drawdown. We would have gotten 5.5 pips of drawdown, and then it came down 5.6, now to that 0.7, maybe even more. Yeah, 8.2. Yeah, so that would have been fine, right? At least with these parameters. Okay, so let's look at the other one that we've got, which is right here on the USD Swiss franc, USD CHF. We can see again, flat, negative 100, oversold. So this is actually the first buy that we're going to be looking at. So on green chart 2, this would be 0, and this would be flat, and then these lines would be oversold or below this red threshold. So we have all those parameters, so once that candle ended, we would have taken a long or buy trade right there, 1.00842, and our take profit would be 1.00892. All right, 892. So this time we want it to go up, right? We want it to go up and take profit. And then our stop loss will be 1.00742, which is 10 pips. Oh, right there, yes. Okay. Let's click forward. Boom, there we go again. So this one didn't have any drawdown. Yeah, 1 micro pip of drawdown, and then it went up about 11.4 pips, so double what we were looking for. Okay, so that's the flat top. Really simple, setup. Again, these are really useful because when people first start with us, I mean, you open up a chart like this and it's like, holy cow, how am I ever going to learn all of this? That's insane, right? It's going to take a really long time for me to learn this and be able to use it. And really, when we can break it down to something very systematic, knowing that you don't have to use every single one of those lines. Most of our most effective traders don't use all of them. They use 1 or 2 of them. But every person is different. Some people like the TNT. Some people like major minor. Some people like pressure, right? Or a combination of them, right? In combination with each other. So, we don't try to limit you to what the capabilities are. It's the floodgates, right? You do whatever is going to be most effective for you, right? So just some quick math. If we had taken these 1, 2, 3, 4 trades, right, and you had a max funded account with us, so let's say that you're trading a max funded account, $100,000, and you took those 4 trades, and you were risking 2% on each of those trades. So you were risking $200, right, to make $100, right, because it's 2-to-1 risk to reward. To make $100. And you won 4 trades, right? So each trade was worth $100. $100, or sorry, 100,000 is 2,000. My goodness, nobody even called me on that. I'm the only one doing math around here. That's 2,000 and 1,000. 2%, right? 2% of 100K is $2,000, not 200. Okay. So 2,000 and for risk and 1,000 for reward, and we won 4 trades. So that's $4,000, right? Now let's say that we were just doing 2% with a $10,000 account. Well, it's still $400. Let's just say you had a mini account, right? All you could get started with was a $2,000 account, not a $10,000, not a $100,000, just $2,000, right? Then this trade is worth $80, or these trades would have been worth $80 with a $2,000 account. So 1,000 would have been 40, right? 2,000 would have been 80. So $80, right? So you're talking about, you know, a 4% increase on your account. 4% increase is huge for one day, right? What can that do for you? For those of you guys that, you know, are looking at day trading and wondering how these numbers work out, we can show you very simply, right? So there you go. That's the flat top, and now I want to show you guys something else really quickly, and that actually has to do with some of these other charts as well. Bring these back up and pull these to the beginning. Okay, stop that from replaying. That way we can come back and look at these charts. Okay. So we have 3 types of indication when we're looking at indicators. All right, and one is our or one is logical. So the direction they point is the indicated direction, and we saw that if you guys go back and watch the video on dirty pressure, we saw that, right? Major, minor point up, and we trade up. And there's other setups that we've gone over on the sweep that are directional. We call them logical, because for someone who's new, when you look at something new, you try to put it in terms that you can understand, so you can try to make sense of what you're looking at. And so when someone who's brand new looks at our indicators, your assumption at that point is, well, if it's indicating, if it's pointing up, then logically it should be indicating up, right? Which is sometimes true, and other times not. So the illogical is the direction they point is the opposite of the indicated direction. So they're pointed up and they're telling us to sell, like major, minor were in most of those examples that we were just looking at, right? Let's say the Aussie CAD, where these were pointed up and we were saying, okay, get ready to sell, right? So that's illogical. Now, the setup and as well as most of the setups that we've shown you guys at this point are all pattern-based. Now, within pattern-based, you can have logical and illogical setups, but they're pattern-based. It's a systematic set of parameters for identifying a trade direction, right? So it's like a square peg, square hole. Now, learning to fluently read the indicators takes practice and discipline to backtesting. And but initially, most traders are more comfortable with the third option, which is pattern-based. So it's like sight words, right? And you guys have heard me use that analogy before. Sight words when you're first learning to read, right? You're shown a word, or your kids are, shown a word. Maybe the word is they or was or something simple, right? And they don't know how to sound it out. They don't know how to sound out each letter to make up the word and read it, but they recognize the shape of it, and the teacher tells them this word is was, this word is they, and they can learn enough of those and memorize just those, the way they look and what the word is, that they can sometimes even read a very simple children's book, right? Without actually knowing how to sound words out, or sound letters out to make words. They can read just by some of those sight words. Well, in the same way, our patterns work within our indicators. We can show you a pattern, explaining to you the systematic setup, and you can use it to be successful in the market. It also gives you insight as to some of the subtle nuances of the indicators that make up that pattern, so that someday, if you choose, you could become a more discretionary trader. So some traders never deviate from the systematic way of trading, when others continue to devote themselves to learning how to read the indicators more discretionarily. Others use a hybrid approach to apply both disciplines, systematic and discretionary. Right? So maybe you've got a systematic approach like flat top, and you go and you look at flat top and you say, okay, this is the systematic. Yes, it's flat, the major minor overbought, but I've noticed that when pressure looks a certain way, it doesn't work out as well. So now you're using a little bit of discretion based on your experience and back testing and what have you to call it audible on a situation. Say, I'm not going to take that one because pressure just doesn't look the way I like for it to, and that gives me mixed results, and I want to have consistent results, right? So it's more of a hybrid approach. It's a little systematic, a little discretionary. Sometimes it's a lot systematic, a little discretionary, or vice versa. You guys get the point. It's kind of both worlds. And there's no universal right or wrong approach. Ultimately, it's what's right for you, right? So there's no cookie cutter approach. Everyone has different risk appetites, personalities, and all those things play into how you day trade. Now, really quickly on that topic, I want to show you guys what we mean by illogical, especially when it pertains to the thick orange. So I marked off some examples, and this is just from earlier today. You can see that this is 7/2/2021, and this is the last candle of the day, right? So the day's over. That's why the market's not moving, Forex, until Sunday at 5 o'clock Eastern. Okay, but watch this. If I go back on some of these here, let's make sure I just didn't miss any. Yeah, I guess there's one right here. I'll mark that one because that one happened towards the end of the day. Yeah, okay. I think I got all. Okay, good. So just going back from the end of the day to now, right here we have a red candle and the thick orange pointed up. And a lot of times this is an indication of another down move. Even though if we looked at this logically, and by the way, there are instances where when the thick orange points up along with other things, it means it's indicating up, right? But in this particular instance, all we're looking at is the thick orange pointing up and a red candle, meaning as that moved up, the market moved down, right? And there's a reason for that. There's a whole science. I'm not going to get too far into it today, but this is an indication to sell, to short, not to go long. And we actually got the last candle of the day was short, right? It didn't move much. It only moved 1.5 up and then 2.1 down. Let's go to another example. Make sure I'm not missing any. Okay, so right here on the GBP USD, we've got a similar thing going on. And actually, let's go back to that. We'll look at this one. No, we'll go back to okay. Right here. So right here, earlier on the GBP USD, we had a thick orange pointed down and a green candle. So that, again, is indicating long or buy movement is coming. And we get up. And then right here, it happens again, right? We got thick orange pointed down, green candle. So now we're looking on the next candle to see if we can get some long movement. click that forward. Yep, and that one went up, right? Right here, same thing. We can see that on the Gdp Jpy, thick orange is down, green candle. We're looking for an up move, a buy move, and that moved up. And then again, right here, we've got thick orange down, green candle, so we're expecting more up movement. Let's click forward. Good. So you can see how, and a lot of times once it starts working logically again, reactively, right? It was pointed down, green candle, down, green candle. Now it's up, green candle. That's generally the end of the move. And a lot of times it'll start to soften or even reverse. So there's some follow-ups in there, follow-up trades that you can take in there as well. But you really got to study it to get a feel for it. And good. So you can see that that was, you know, kind of the result in that example is after that sequence was done, we reversed, right? We started going short. Right here, looks like I marked off another example. We've got thick orange up with a red candle, so we're looking for more sell. There's more right there. So you guys get the idea. It's very illogical, right? It's very nuanced. We could look at, we wouldn't, but this would be another example, red candle, thick orange pointed up, but this is the end of the day candle. So this one wouldn't count. We don't want to take an indication at the end of the day and try to apply it come Sunday because that indication is expired by that point. Right? So we just look at the indicators new on Sunday and take trades. We don't try to carry one over. We don't try to put in this trade prior to the market closing and then hope that it's going to carry over into Sunday and fill for us. So, and it could, but we don't count on that. It's not consistent enough. So we don't do that. Okay. So again, we can see examples of logical and illogical and pattern-based setups within our indicators, and really the most effective are the illogical in terms of being able to capitalize on the zero-sum aspect of the market and getting into trades at a low point and getting out at a higher point. And a lot of times that'll lend to trades filling faster, more consistently. So there's a lot of advantages to trading that way. It does take some level of psychology because it almost seems counterintuitive sometimes when you're putting in those trades in the opposite direction. But that's what makes the indicators so powerful, is that we're able to pick up on a change in the market prior to it happening, so it is predictive in that fashion, and not just predictive but accurate. And those two things have to coincide. Otherwise, if it's predictive but it's not accurate, is useless, right? You don't know when to trust it and when not to trust it. Okay, so really quickly wanted to also show you guys just some quick trade results. So this was done in one day by one of our traders, and pretty simple basic type setups that we've been learning here on the sweep. But you can see just in this one day there were $220 was garnered on that day. And then on this one, so this was like 6/18/2021, so both of those are taken on the same day. And then this one is 6/22/2021 and 6/23 and 6/24/2021. And you can see, so out of these days, there's one day right here, which was worth about $300, $400 and $430 or so. And that's in one day. And then here is, let's see, 1, 2, 3 days right there. And within those 3 days, that was another 230, let's see, so around $330 or so. And then one day right here on the 24th. So that's 1, 2, 3, 4, 5, 6, 7 trades, and that was the yield, 789.30. So not bad, right? I mean, that's solid just for a few quick scalps. One day, here's another day, first day type thing, where the trader put in one trade, and got out of it relatively quickly, banked $100, right? And if that's all that trader did was just that same trade over and over and over, eventually it makes more dollars, right? Because his or her account has grown, and as it grows and you're trading a percentage of that account, that percentage becomes larger. Therefore, the trades are worth more money, right? It's not rocket science, it's pretty simple. So, I want to show you guys this, and I want to show you, kind of elaborate on our indicators again, because I want to invite you guys to try us out. I want you guys to check it out, see if it's everything that we say that it is. Because we make bold claims, and we do big things. And, of course, there's skepticism. I wouldn't expect anything less. I'm skeptical when I hear about things, and I want to look into it. So that's what I do. I check it out. I look into it. And, again, that's what I recommend you guys do. We've got the Trader Lite trial. It's free, and it's a 30-day trial, but really all you need is a week and a half to 2 weeks with us for us to figure out if you're a good fit and for you to figure out if you're a good fit for us, right? You'll get software set up, on-demand training videos, and there's tons of content. The on-demand training videos are awesome. Weekly continued education webinars and daily trading webinars. Trader chat for mobile and desktop. Real-time alerts sent straight to your mobile device or desktop. And then you'll get 2 one-on-one coaching sessions with a professional day trading coach. So we just add that for free, right? Which is if you have ever priced out coaching, especially in day trading, you'll see it's thousands of dollars. So we're giving just in these one-on-one sessions, that alone is thousands of dollars, right? And I was telling you guys before, I know a guy that charges $50,000 to come out to your house one time, and he'll go to wherever you are in the world for one day, 1 6-hour session, teach you everything he knows, and then he leaves, right? There's no follow-up, there's nothing like that. So it's just on you to memorize everything that he said and then pay him $6,000 to do it, right? We don't want you trading with real money when you're on the Trader Lite trial because you don't know how to trade yet, generally speaking, and we don't want you to lose money. So we just forbid it, right? Okay. So if you guys are interested in signing up, and by the way, thank you to you guys that have already signed up for it. It's awesome, and we're already working with you guys, and hopefully you're seeing that it is everything that we say that it is. For those of you guys that have not and you're stalling, this is going to go away. I'm not sure yet when, but it is going to go away at some point soon, so you definitely want to jump on it while you have the opportunity. In the description, there is a link to register. So click on that link, register, and one of my staff will reach out to you to make sure you got set up correctly, and you'll schedule that. By the way, after you register, you'll have the ability to schedule that when that session happens for you, and point you in the right direction of where videos are, where indicators are, where lessons are, get you signed up for webinars, all that good stuff, and then schedule you for your first one-on-one coaching session. So cool stuff, guys. Definitely jump on board. Look at the link in the description for that registration page. So I appreciate you guys being here with me today. As always, it's a pleasure. You guys have a great 4th of July weekend. Happy Independence Day. And we'll look forward to seeing you guys next week for the sweep. Have a good one. Happy trading.